Hello and welcome to the look ahead for Tuesday, the 19th of November, with me, Fiona Cincotta, Senior Market Analyst at City Index. So, overnight, we'll have the release of the minutes, the latest RBA meeting. In the European session, we have Eurozone inflation. This is a secondary reading. We've also got Canadian inflation data tomorrow, US housing starts, and oil. We'll be watching the API inventories. So, just kicking off with the Eurozone data. So as I said, we've got Eurozone CPI data tomorrow. It is a secondary reading. It's expected to confirm the initial reading, which was a 2% inflation in October annually, up from 1.7%. And the market's going to be watching, obviously, if we do get sort of a downward revision to inflation, then that could sort of increase expectations of a more dovish ECB when they meet again in December. However, if we get an upward revision, then that could obviously have the reverse effect, and with the ECB expected to possibly take a more dovish, hawkish tone. But I think overall, what we're expecting to see is confirmation of the data. We've also got PMI figures out on Friday, where we're expected to see that the Eurozone business activity, the composite PMI, slipped into contractionary territory just at 49.9. Overall, I think that data supports the view that the ECB will cut rates by a further 25 basis points in the December meeting. Obviously, we've still got a lot of data to come before that meeting, but I think, in order for the ECB to cut rates by 50 basis points, we would need to see a sharp deterioration in the data, and that is not expected. Obviously, we know that the markets are a little bit nervous about what's coming as far as when Trump comes into power in January and what trade tariffs may be applied. But at the end of the day, the ECB are going to be making their decisions on the data that is coming in, not on what they expect a potential or the US president to be doing and how that might impact the economy. So the data will be what we'll be watching. This is the euro US dollar. As you can see, it has been falling very sharply across the last 2 months. From that high of 112, it's now down around the 105 level, still below 106. So, I mean, we have seen a recovery from the low, which was the 105.16. But the 105 level, we have seen a slight recovery from that, but it's just a consolidation here. I mean, we've broken out of that falling trend line, falling channel. We're below the 200 SMA. We're below this rising trend line that's been dating back to October last year. So I mean, this consolidation we're seeing is seeing the euro US dollar out of oversold territory. Just as far as the US dollar is concerned, we are seeing a little bit of profit taking in the US dollar. Obviously, it rose to 2024 high last week. It's been supported by a much more hawkish sounding Fed, who have said that they're now in no rush to cut rates further, and that's just a few months after they cut rates by 50 basis points. So I think the outlook remains fairly negative for euro US dollar. Obviously, if we get weak data tomorrow, that's only going to add to the bearish pressure on that pair. USD CAD, another one that's trading at 2024 highs, just falling away again. So we've got the inflation data tomorrow, expected to tick higher to 1.9%, up from 1.6%. Again, similar position. We've had really quite a dovish Bank of Canada. They've cut rates by 50 basis points in the previous meeting. They're expected to cut rates again, potentially by a further 50 basis points as inflation cools and as the economy slows. But as I said, we're expecting to see a slight tick up in inflation, still expected to remain below the 2% target level. Now we've seen a little bit of a improvement in the price here of US dollar CAD improvement. Sorry, we've seen a little bit of strengthening in the loonie as the US dollar gives back some of its recent gains. It's still trading comfortably around a 3.5-year high. The price would need to break down this level here, the 139.50, in order to negate that near-term uptrend. We'd need a break below 138.25, the November low, to create a lower low. And that would then open the doors for around the 137.57 level. So uptrend very much intact here, despite this sort of profit taking that we're seeing today. On the upside, next one to be looking out for is 141. That's the high, or pretty much where it got to on Friday. So if we can take out the 141 3.5-year high, that would bring 141.50 round number back into focus. Let's also just take a quick look at oil. We've got API oil inventories tomorrow. Now, oil is just, it's trying to break down that 67 level that we've been watching for so long. I mean, look at how many attempts we've had at the 67 level. Still, it's rebounded higher, moving back above 67. And basically, oil is being supported by concerns over increased tensions between Russia and Ukraine as the sort of war develops into a new stage where Ukraine are able to use US artillery to fire long-range missiles. So there's a concern now that Ukraine might look towards oil infrastructure, which it hadn't been able to do before, which has helped lift the price. However, gains could be limited due to concerns over a supply glut next year and also the Chinese demand outlook. As I said, we've got API inventory data tomorrow. If we get a larger than expected draw, then that could see the oil price continue its rally towards 70, and then we'll head back up to that 71.50, 72.50 level that we've been watching so closely. On the downside, if we manage to break below the 67.50, that brings the 65.50 level back into focus on the downside. So excellent. I hope you've liked what you've seen from me today. And if you do, then please do give this video a like. And for more videos like this, please do subscribe.